So during our live meetings, we have clickers and we ask customers questions on some statistics on what their operation looks like for this coming year, maybe kind of what programs they were enrolled in. And the first question we ask here is, are you seeding winter wheat this fall? Obviously 1, 2, or 3, yes, no, or maybe. And here's the results from our meeting in Sunburst. This is quite a change from last year. Most of this is because winter wheat's not projecting very well for the bank. So 70% of our producers now aren't going to be seeding winter wheat, 30% are. The other thing is how do you prefer to be contacted? This keeps shifting around for our customers as well, mostly shifting away from phone calls and post office mail to email and text messages. I'm sure most of you watching this would prefer probably text message or email as well. So one of the biggest questions we get is what else can we insure, especially for the producers that have been consistently just doing wheat and haven't experimented with other crops. So the first thing we're going to walk you through is what's insurable in most of our counties. And then we'll take you through some of the specifics on the different insurances for the different crops that you guys might be interested in going forward here. So what can we insure? Pretty much every county in Montana we can insure dry peas in anymore. This includes smooth green or yellow peas. Those are one type. Lentils, large or small kabuli chickpeas, which are also considered garbanzo beans. And then forage peas grown for seed. To grow forage peas for seed, we need a contract with the seed supplier. For barley, we can either do feed barley or malt. Mustard, brown or yellow, that's not available in all of our counties, so make sure you check county by county if you want to do mustard, if it's insurable. The other thing with mustard is you must have a contract to insure it, but the good thing about it is it actually uses your contract price then. So if you end up with a really good mustard contract, we can use that for the guarantee part of your crop insurance. On canola, on the high oleic types, we can use your contract price for the insurance if you do a production contract. Going forward, on the regular canola types, the non-high oleic types, we can't use contract pricing, but there certainly is canola insurance available in most every county that we cover up here anyways. And then oats, a pretty small guarantee type crop because the price is so low on it, and then camelina, really poor guarantee, probably $50 to $60 an acre on that crop. Obviously, wheat's insurable too, but you guys mostly know that. So we were just covering some of the alternative crops since some of you were looking to switch away from wheat for a while here. What can't we insure? Annual forage crops like willow creek winter wheat, pea oat, pea barley hay, basically any annual forage type of thing you see we can't insure. That would be a NAP policy at the FSA. We can insure all other kinds of crops. We just need to do a written agreement on that. And for the spring crops, the deadline for that is March 15th. So if you're going to do safflower or flax or something that's not insurable in one of our counties here, we can probably get it insured. We just need to address that way before this March 15th deadline so we can get the paperwork submitted and see what kind of yield they're going to let you start with. So what are the trends in our counties? This Toole County pretty much masks, I think, what's happening all the way around it. Basically, the barley acres went up quite a bit all the way up through 2013. That's when there was contracts from all sorts of different maltsters and pretty much anyone could get a contract. They started cutting contracted acres then in 2014 and 15, and so you can see the acreage declining here, and I think there's going to be even a more substantial drop probably going forward here into 2016 and 17 because the contracts continue to be cut farther and farther as they're loaded up on barley through most of these malt places. Same thing on wheat. Spring wheat, people started dropping acres substantially in our county from about 180,000 down to only about 135. Mostly because the spring wheat and winter wheat price wasn't spaced very far apart, and the discounts were so substantial on spring wheat, and the winter wheat would yield more that there was a huge shift towards that. I think this next couple of years we're going to see a drop in the winter wheat and the spring wheat potentially because the price is so low that it doesn't project even a reasonably decent income going forward here. But here's the big player now in our counties, right? Are these pulse crops, the smooth peas, the lentils. Smooth peas in 2011 went from under 5,000 acres in Toole County all the way up to 30-some thousand acres. Part of the reason for this is that there's all sorts of places now that we can market this crop where we couldn't before, but also farmers are starting to understand the benefits of this rotation and seeing that it's working. So, canola, I think that's something that people look at doing more going forward here. Part of the reason is, which you'll see on the next slide, is there's a big investment in the canola processing plant up in Lethbridge. It's going to up their capacity, but also we're starting to understand the benefits of all these rotational crops, and canola is an excellent oilseed crop to throw in the middle of our rotation that cleans up the weed population quite a bit. So Richardson Seeds in Lethbridge invested $120 million to upgrade their plant. That's going to more than double their capacity in this plant just north of us up here. So hopefully it'll open up kind of a better canola market for us to utilize as well. So what happened with our revenue prices? The harvest and base prices for 2016 on winter wheat, we started out with a $5.34 projection last fall. That's our base. At harvest time, because the futures had dropped so far, the harvest price went down to $4.05 a bushel. So there was a 24% drop in the winter wheat price. To simplify this, it basically means you can cut 24% more bushels than what your initial bushel guarantee was and still have a claim on your crop insurance. So if you're right on the edge of having a crop insurance claim, or if you're already into one on the winter wheat side, this will either put you into a claim or enhance your claim pretty substantially. On the spring wheat and durum side, we started poor, so only at $5.13, and we ended pretty much as poor at $5.04 a bushel. So there was only a 2% difference on the spring wheat and durum crops. Basically, you have to have a bushel loss to get paid a claim on that stuff. On the barley end, it dropped 15%. There's a lot of hail on the barley in northern Toole County especially. This is going to increase the claim payments on those barley claims by quite a lot. Or if you're right on the edge of having a claim, it'll probably kick you into one. So it's important to check for revenue losses on winter wheat and barley as they have significant drops. Please turn those claims in as soon as possible. If we end up measuring your bins and there is no claim, all it takes is just a couple hours of paperwork for you guys and you can sign off on it and be done. But it's always better to turn the claim in and then sign off on it later than try and turn it in late. We can also generate a revenue trigger report through our office that'll show you unit by unit what your initial bushel guarantee was. So in this example, you can see that our total guarantee on this unit was 38,000 pounds of dry peas. Because of the revenue predicted drop on peas, now they're saying we could cut 42,000 bushels. So unit by unit, it'll put in the projected price and the harvest price and then tell you how many bushels you need to be below now to have a loss. So if you want to just check it out for yourself before you turn the claim in, give us a call and we'll generate this report. Here's another clicker question. When the harvest price is lower than the base price, one, you use the price you sell your wheat for to settle your claim. You can harvest more bushels than your initial guarantee and still qualify for a loss, or still have to have a bushel loss to get paid. The answer, which most everyone got anyways, was you can harvest more bushels than your initial guarantee and still qualify for a loss. The reason for that is they're valuing your wheat at less than what we started with, and so it takes more bushels to get up to your revenue guarantee. On wheat and barley, they never use the price you sell it for to settle your claim. They have set discount factors that they're going to use to knock that backwards. So if you think you have a claim, way better to turn it in now and sign off on it later. You have 15 days from the time you harvest a unit to turn in the claim. That's the end of the insurance period once you harvest, technically. And there are some poor grain quality factors that they'll use for paying a loss or reducing your bushels. A few examples will be US number 5 or sample grade grain. Let's say you had 10,000 bushels of wheat, they may only count it as 6,000 now because it's sample grade. Poor falling numbers, that's kind of new to wheat, but if you have some falling numbers issues, that'd be worth looking at, that it may kick you into a claim. And then mold or sprout damage. The one big thing on wheat, which we get questions on every year, is protein is not a quality factor. So I understand that a lot of our wheat's only worth $2 a bushel and the crop insurance is valuing it at $4, but that protein's not a quality factor, so there's no way really for that to be worked out in a claim. The cool thing on peas and lentils, as far as the quality adjustment goes, is that once peas or lentils are number 2 or less, your dockage or the discount they give to your bushels on your insurance for the claim side is based strictly on what you get for number 2s or 3s versus what you should have got for number 1s. These are the only crops that really work this straightforward on the multi-peril side. So just a quick example, just so you understand how this works. You have number 1 lentils are worth 25 cents at the elevator, let's say. You went and harvested your crop, we got all that rain, and now they're number 3s. So they're only going to give you 15 cents when you should have got 25. You harvested 10,000 bushels of lentils. The crop insurance then will adjust your production down by dividing the number 3 price into the number 1. So 15 into 25 gives us, you're going to end up getting 60% of the price that you would have got had they been number 1s. So they're going to take the 10,000 bushels you harvested, times 60%, it only counts 6,000 bushels against you for the crop insurance for your claim. So you can see these pea and lentil crops, when the price drops, there can be pretty substantial increases to your loss payment because it's getting reflected directly on the percentage of price that you lost. They're going to knock your bushels back that far. One quick reminder on the malt barley endorsement claims. You need to have the samples submitted and the results back within 90 days of the end of harvest, which would be the end of when you harvested a unit, or they will not be payable. Samples can be taken by a representative of the malt company or an adjuster, but the grower can't directly submit samples to the state grain lab for a claim. So if the malt company's not getting out there and getting your samples done, or they think they're not going to get them back within 90 days of when you finished harvest, please let us know and we'll send an adjuster out. They'll take state grain lab samples from your buckets and send them in. So if you think you have malt issues, we need to get the claim submitted ASAP and have an adjuster come take bin samples if the malt company isn't going to get results back in time. When are my premiums due? This changed a couple of years ago from October 30th to September 30th for the multi-peril. So all of your federal crop multi-peril insurance is going to be due September 30th, the end of this month if you're watching this right after we made this video. And then the hail insurance is not due until November 1st. So that's why your bills have split amounts between what the total due is and what the current due is. The multi-peril is due right away. The hail insurance isn't due till November 1st. If you don't pay the multi-peril by November 30th of 2015, that'll result in termination of your coverage for the winter wheat. If you don't pay that premium then by the spring, you won't have any insurance coverage on the spring crops as well. And interest is attached if you don't postmark your multi-peril payment by September 30th. So what about 2017? So looking forward, obviously the prices have dropped some. The winter wheat base price now is only $4.75 a bushel for conventional wheat and $9.92 for organic. This would be for this 2017 crop year going forward. The other thing we try to remind you on winter wheat is that if you do enterprise units on winter wheat, it's going to throw not only the winter wheat but the spring type of wheats together into one giant unit. So granted, you get a big premium discount for doing enterprise units on winter wheat, but it's going to take the spring and the winter and the durum types, throw them all together into one big unit. So even if the winter wheat has a loss, let's say the winter wheat dies out, you'll have to harvest the spring wheat before a loss payment will be issued to you because it's all thrown into one pot. Large discounts in the premium for this, but we usually discourage it because oftentimes you'll get into the spring and maybe you want to just kill the winter wheat out and fallow it if we have a really dry year. You don't really have that option, or it's not as convenient to use if they're going to throw the spring wheat into the same pot because you're going to have to wait and see how the whole pot settles out before they'll pay it. Had you had optional units on here, obviously this 50 acres of winter wheat could have been hailed out or it could have winter killed. You can collect your money on it and all the rest of them will be separate, including the spring wheat. The winter option, we encourage almost everyone to do this because there's been too many times we get into the spring, some of this winter wheat is winter killed out and you want to just take a whole unit out and just fallow it. Or let's say you want to seed it back to barley. If you don't pay the extra 10% for this winter option, your only option then is to reseed it to spring wheat and take the replant payment. For the 10% more, you can either destroy it and not insure the second crop. You could destroy it and take all your money out of the winter wheat and just fallow it. Or you could destroy it, take all the money out of your winter wheat and seed it to barley, let's say. If you don't elect the winter option, like I said, your only option is to take the replant payment, which right now is probably $15 an acre for most of you guys, and seed it back to spring wheat. That pasture rangeland and forage insurance, its deadline is November 15th. We've mailed out most of the apps and acreage reports to you guys that are our customers now. Basically, just double check those maps, make sure you didn't get rid of any hay ground or any grass. If you want to change levels or months, this is the time to do that now too. And we just need to have that stuff signed and back to our office before November 15th. So what about the Beginning Farmer Rancher program? For you guys that have kids coming back, or if you're a young guy starting out, all you need to do to qualify for this is have an insurable interest in a farm or ranch for not more than 5 years. You can exclude any years when you were under the age of 18, in active duty in the military, or gone to college. So if your parents put you on the corporation when you were a kid, you technically had an insurable interest in their farm or ranch, but we can exclude the years when you were under 18 in active duty in the military or gone to college. So if you're just getting out of college and you've been riding along in your parents' corporation and now you're going to start your own operation up, you could qualify for this. You just need to fill out a beginning farmer rancher app before the sales closing deadline, which is September 30th for winter wheat. So make sure if you think you qualify for this, you let us know right away and we'll get an application filled out. What does it give me? An additional 10 points of premium subsidy. So the government, like in an enterprise unit structure, pays 80% of your premium. Now they're going to pay 90%. So basically, if you're in enterprise units especially, it could knock your premium almost in half. It's easier to transfer yields from a previous producer. All you have to have done is provided labor for that operation in previous years, and we can use the yields then from that producer. So if you helped a neighbor farm for a while and now he wants to help you transition into taking his operation over, we can use his yields. Then you can use 80% of the county average in the years where you have some poor yields for a substitute yield instead of 60. So pretty big benefits, huge savings in premium, especially if you're in the enterprise unit structure, and definitely worth doing. Native sod busting, the new farm bill really discourages this. Any native sod broke after February 7th, 2014, which is when they signed the new farm bill, will receive 65% of the county average for 4 years. So you don't get to use any of your actual history for 4 years. They'll also take away 50 points of your premium subsidy, which is huge. That would basically double, if not more, your premium on some of these crops. And the only way to get around doing this as far as insuring these crops on the acres that you did the sod busting is to seed a non-insurable crop, which we'll get into. There's an exception for 5 acres or less on this, but that's cumulative since they signed the farm bill. So you did 3 acres last year, 2 acres this year, then you're out of your exception going forward, and every acre then of native sod needs to be reported. That's broke out. Always talk to the FSA before doing any new breaking. If you don't, you basically could be thrown out of all these farm programs, and you'll see going forward if you lose these PLC and ARC payments because you broke out 5 acres of grass, it could be a substantial amount of money. Like we said, if you don't want to pay for the insurance for the first 4 years on this new breaking, it has to be seeded to an uninsurable crop like forage, winter wheat, let's say. So we're half done here. We're going to transition into a new part in your presentation on this YouTube video series. And at the meeting, we always ask, do you want to take a 10-minute break, keep going, or this sucks, and let's go home. So I'll show you the results here anyways. 58% wanted to keep going, 10% a 10-minute break, and a quarter of the people said this sucks, so let's go home. So at least they're brutally honest.